Alright, hey everybody, DayTraderRockStar here, and a great video. I've been meaning to get this video out over the last couple of days since I've launched the School of Stock, where we put out some courses based on the methodology that I trade and a lot of people trade here at Day Trading Radio. Today's video is going to be a good video. It's going to be a great video. We just finished out the week, and we're going to be talking about building a trading plan and how important it is that trading plan to build that out. And that's so important. And if you get this video is so important that if you understand the concepts, and there's not many of them, there's about 4 or 5 rules to trading that we're going to discuss, and it's that simple. All right, there's a method and a very logical approach to making money in the markets. The downfall is most people don't have the discipline, they don't have the experience, or they have inexperience in understanding the markets and stuff, and there is a learning curve. So, you have to deal with that, or, learn something that has been proven successful over time, and that's what I do. I teach this. So I'm passionate about it, and what I'm going to show you right here is it's the most logical way of making money in the markets. All right? It's so good. It's so good I'm going to actually let me put on the air conditioner here so I can sit down with you, and let me pour myself some ice and a drink here. And then I want to show you some amazing stuff. So let me put that on pause right now. Hell, I wanted to put it on pause. I'm walking with you. Got the long mic, bringing it across the office. Bringing it all the way across the office right here to the AC. Start that up. All right. Then we're going to walk back to the west wing of the office. Let me get my glass. Let's go over here. Let's get some ice. Because this is a great video. I actually should have the camera on for this video too. There goes my ice. And everything just fell off the ledge. Get another cup. We'll go with the plastic cup now. That's my ice maker. And then we have, let's get a beverage here. So, and then, like I said, this is an important video, so don't go anywhere. You might be hating this, right? Jesus Christ, what the hell is he doing? He should just do the video. Well, I've been doing a lot of videos, 500 videos, a lot of great epic ones. This one is going to be one of those. So, let me sit back down here with you and start fresh. All right, sitting back down here, and in front of you, you see four listed components of what is really important in trading. And I'm going to go over each one of these. And it seems simple enough, and you say, all right, you got discipline, understand, patience, understand, a detailed trading plan that consists of a methodology that has been proven successful. That's a little bit more difficult, and proper research techniques is very important, because now you're going to find those setups if you don't know what you're looking for. But basically, that's how simple it comes down to. Because number 3 is, that's your core, that's your foundation, that's your trading methodology. This is your business plan. All right? And for your business plan to work, you have to have a successful plan. I mean, it has to make money on paper, so to speak. If you could automate it and do everything, it should come up with a profit. That's all you're looking for, a profit. So, better than 50% return, but we want much higher than that. You want something that's proven successful. That is, hard to qualify and quantify, because so many people have a hard time of having the discipline to kind of continue to follow the methodology. As a trader, and as I usually kind of coin a human trader, you have all these emotions that are running wild, especially while you're trading. And your discipline is one of the most important things, is to kind of understand that the right way is already laid out for you. Anything other than that is a step down. You're taking the odds away from you. Everything works on percentages. If I show you a setup or a technique that works the majority of the time, over 80% of the time, that's because we have tested it and done it and recorded it. And some people will say, well, that's not a good, because anything changes, everything changes. Yeah, and I understand that. But you're working with something that is successful. and you use it until it's not successful. And with trading, you will start to realize that trading is controlled by bots, automated trading bots, algorithms, and these are all based off of real science and mathematical formulas. And if you're able to identify the same thing these bots are doing, which are taking out the human, the human component of being undisciplined or being impatient, the bots will know exactly what's going on. There's no human interaction there, so they are following that consistent trading plan, and it will leave a map on the charts. And when you see that map on the chart, that's your chart moving up. Why did it bounce here, and why did it bounce here again, and why did it bounce there, and why are these trend lines holding up? Because these automated traders are able to calculate these levels, and trade off of them, and have the discipline to get off. They don't have to worry about the amount of shares they have and how far is it going to go. Are they going to get enough money for the trade? It's when you start off with that type of capital, you're already in a great advantage. It's the smaller traders that need a bigger move, that tend to hold on longer, yet don't pay attention to the signals that are in front of you. So we go back to this list. All right, so the detailed trading plan is something I teach. It's called the HPS methodology, and we use one certain technique that is just a very logical, a very mathematical approach to the markets, and it works. It works the majority of the time, a very high percentage of the time. When the conditions are good, I mean, this thing is unstoppable. So we use that as our foundation for our business plan. Extreme discipline, is understanding that technique. Understanding why the technique works, when you should get in, and when you should get out. The hard part is getting out. I always say that the easy part is seeing the signal. The hard part is when you see that signal moving higher, or that stock moving higher, whatever you're trading, futures, options, are moving higher into condition, or going in the direction of the signal, playing out, and then being able to take that profit off the table. Very hard to do sometimes. You have to, it's not hard to do at a certain point, but it's hard to do usually when the trading plan requires you to do it, because it's so void of indecision. It gives you a hard point of exit, a hard point of entry, and whatever you get in that range is what you get. But that's a high probability trade that you're going to get something. All right, patience. The other big thing here is patience, is waiting for that setup, and that goes into this week's watch list. I'm in the process of doing the HPS watch list. The HPS watch list is the setups that I scan every Friday for the next week that fall into the proper methodology and the setups. An HPS setup goes on the HPS setup site, and Day Trading Radio members get that sent to them when they hit their targets and hit their triggers, so you know exactly when to get in and get out. So I'm going to go over some of those from last week right now, and I'm going to explain to you why this is so important to pay attention to, because you're going to see these over and over again. We go back here, we take a look here at the School of Stock, and a blueprint. We do, what I like to do is have a blueprint of your trading, your trading plan. That's also called a blueprint. In this case, it's a definite set of rules to follow. If you don't follow them, then the method will be contaminated. And the way I'm talking about contamination is that you can't prove anything if you decide just to take a couple and not take the other ones. So the method here comes with our order entry criteria, our profit exit criteria, automated stop criteria. The blueprint also describes what the risk management is and how you place your stops, how and when to increase your position, how to set up your charts, of course. And again, this is relative across the board. You could trade this way with whatever you want to trade it with. You have to take the methodology and expect it. You can't just go be trying to get your dry ships or your 50. You can't be gambling, because you need to get. You'll get burnt. You'll get crushed. You really will. It's all a matter of time, because we've all been there. If you've been a trader for more than 10 years, 15 years, you've probably gone through your times of making a stupid decision and getting hurt because of it. That's what we try not to do, is do stupid decisions. Anyway, So that's what the HPS methodology is, and I'm going to show you examples of what we've been trading this week and how important it is to stick to that, because it is outstanding. And just to update you again, maybe for some new people not familiar with the site Day Trading Radio or how I trade a divergence type of trading based off of multiple indicators, and those multiple indicators lining up, giving us a HPS setup. So we have 5 indicators we work on. The best setup, though, is my stochastic divergence setup, and that's what I teach mostly. And a lot of things just require us to wait for that. So we have that setup condition. I have rules defining that, and we also have, there's so much going on here. We actually have position sizing charts, talking about what size you should get into, and when you're in a trade, as you grow your account, how you should grow your position size. And the main thing is just understanding the methodology, and I don't mind, teaching this. I don't mind teaching it. People are learning about it every day, but the important part of having a site like Day Trading Radio is having all these traders together. That instills the discipline, instills the confidence, and it's a team effort when we trade. It's a team effort, so we are always trading those same setups. Someone might bring another setup into the room. We'll discuss it. It's always a very interesting level. So you'll hear that a lot of times when we're discussing this type of setup, and you're going to see it right now. So I want to show you some examples of these divergence setups and how we've traded those. Let's start off with Ross Stores. Now, retail has been being crushed recently, and I wasn't in this. I actually was on vacation when this set up. But before we went on vacation, we mentioned it, and then I know RPM here also mentioned it on the radio because he was able to identify that divergence. And that divergence is a two-stage divergence. Our first stage underneath that 20 level, it bounced a little, then we came back down and made a new low, and we pushed back up. Typically, I want to see that second stage above that 20, but if it's an obvious, what I call visual divergence, where we have a lower low and a higher low, inside of a wedge pattern, that becomes a, almost a super setup, and it's a corny word for it, but when you have two powerful signals like this, anytime I see a divergence inside of a wedge pattern, we look for a breakout of the wedge pattern. And our measured move is taking that lower trend line and extending it to the top pivot area. And that's our target area. And as you can see, it worked out exactly where it is, and this is where it is now, and I'm actually thinking it's going to go higher because another HPS setup is this lower trend line bounce. Believe it or not, we pay attention to trend lines on the stochastics. There's an underlying reason the stochastics are measuring out. That's what I teach. I'm not going to go into it right now. But there's a reason why we have a divergence and the momentum here shifting, Well, let's go back to that. All right, so we have what you're seeing here is what happens when you get a divergence. And I want to try to explain this a little. Like I said, this is all done in the course. But when you have a divergence like this, and the market here, the price continues to go, but the momentum is shifted. That momentum is the thrust, the power of the move, the underlying power of the move. It's the engine of the rocket. And sometimes it's better to read it on the upside just to make it more logical. Here we're going to look at it on the logical side. The stochastics, remember, is the rocket. All right, the price, or the thrust, the engine of the rocket. The price is the rocket itself. All right, so this is the thrust. This is the rocket itself. When you shoot a rocket off, and going back to my rocket analogy, it's a great one. Let's bring that back up here for a second so I could show you a visual of it. Come on, Johnny, you can figure it out. When you shoot that rocket up, the rocket is going higher, but the thrust dies before the rocket tops out. The thrust dies, but there's still momentum in that rocket that we continue to move higher. All right, so with the moving of the higher here, that's the price, but you've already started to see the momentum, so you know that the price is actually going to roll over because you could read it on the stochastics, which measures the momentum of the move. So if we look back at our example up here, we actually rolled over while the price made new highs. And when that happens, that is our topping formation. That is right now one of the best bear or sell side divergences seen. And look at the result of that. Now we have a buy-side divergence going into this, where we have a low and a lower low and a higher low right on the thickly. Actually, this is going to be one of the stocks, one of the sectors in this week's watch list for those out there who are going to get it. This and Brinker, so a little freebie for you, which are both setting up as divergences. Especially Brinker EAT will be putting that on the watch list for next week because it's a divergence. And I would advise putting on the watch list also because it's my number 2 best bet. Back over here to some of these setups here. I'm going to look back on the HPS, or I'm going to look back in the Trade Alert box and take a look at the trades we did this week. And like I said, most of these trades were going to be based off of HPS setups. LABU was one of our scalps, and even though we're looking at daily setups, this one's actually going to be a divergence now setting up right now. You can see that nice bounce. The other day we had a 60-minute divergence right here, and we had a lower trend line and a higher low, and this was a textbook 60-minute divergence. And from that point on, LABU is a 3 times leveraged ETF that tracks the biotechs. This overall, we'll just measure it out here, just to give you a little general look. It was up about 12% or $7. $7 off of that divergence. For a $60 stock, that's not bad. And when you're able to recognize a channel line like this and a divergence, you know your target's going to be outside that channel. You also know that we pay attention to the first rotation of that time frame, and then a rotation back. So this is the type of setups we've been taking. All we wait for is for them to show up. You know, I could go to any chart and show you any chart out there, and you know, my claim to anybody on Day Trading Radio is to show me a divergence, and I'll show you a stock moving in the direction of that divergence. When you could make that call and be so confident about it, you're going to be addicted to holding on to waiting for these things to set up. You're not going to be going for anything other than these setups. Some recent setups: Schlumberger, SLB. Now you could actually see Schlumberger down here, but the divergence right here that we traded, that we were in, was a textbook divergence. It was a lower low with a reversal candle, a higher low on the 9-3, and a big move up. And we took it off, and it continued to move up a little bit higher, but we got the trade we wanted. The thing with the divergence in our trading plan is that we have to take the signal in, and we have to take the signal out. And when you do that, you know, you put yourself out of range of being really hurt, even though you might say you left some on the table. We have techniques where you can actually scale out on the first exit. You know, that way you're playing with house money, and then bring your stop up to break even. So that's another way of actually approaching that. But I prefer to, just take as many profits as I can and wait for the next setup, because these setups are so good that they're worth waiting for. Those setups are what I work for, and that's what I do. I want to bring everyone those setups. So that's what we're working on tonight. This video is going out before that because I want to, touch base on what is setting up these days. These divergences are unbelievable, and they continue to set up good. The other thing I wanted to mention on this, a couple other setups. That was one of them. I show you the LABU on the 60-minute time frame. That would initiate a scalping setup. If you're looking at trading the futures, we have divergences that happen all the time on the ES. So if I go back and take a look at my ES chart for this week, and that's what we're looking at right now, I want to go back. I'm going to have to zoom out here. That's the overnight trade. Let's see, there might have been one. Let me just zoom out here. I knew that was a 5-minute setup there. Sometimes you have a 5-minute setup, sometimes you have a 1-minute setup. It's much easier when I'm able to do it live for you. Here was a sell side divergence right here. All right, so you had that spike higher, the high here, the higher high here, and I'm looking at the 9-3 a lot. The 9-3 is on the bottom, and you had that high and that lower high. And from that point on, because this was a 1-minute time frame, rotated down, and it executed its exit. Now, as a futures trader, yeah, that was worth 1.5, 2 points. If you would have taken the signal and gotten out on the signal, if you didn't get out on the signal and that 5-minute time frame, underlying time frame took place, then it would have pushed further higher, which is fine. you know, because you could probably catch another trade on that 5 minute. It's all good. And that's what we wait for on those. And everyone is identified. I try to identify all these for you during the day, because that is our ATM play, you know. Not the at the money play, but the ATM, automatic teller machine. When we get those, it's like automatic money. And I know it's, you can't, you think I'm blowing smoke here. Here's a divergence. We're, you know, 4 o'clock in the morning. It happened, you know, when we, after 3 o'clock in the morning, the European Open. So this is great also for European traders who get up. If you get a divergence in the S&P, I get a lot of people talking, you know, from the Australian markets that said I'd be interested in trading the S&P. Best time to trade these divergences between 3 o'clock and 8 o'clock. There's not as much volatility coming in after the open, yet there's enough volume and activity to really give you pure divergences. All right, so that was one right there. And then when we identify some of the other HPS trades with it, here's a divergence right here. Every one that I point out to you is reacting in the way it should. All right, that's it. Case closed. You know, it's not much. I think this was my last video ever, because all I can do is just show it to you over and over again. All right, so that's it. I want to get that out. I hope you enjoy it. I hope you enjoyed the research. I hope you enjoy it. Check out the site, DayTradingRadio.com. Check out the course on divergences at the schoolofstock.com. I also have a foundation course for new beginning traders, and I'll walk, you know, again, any questions, any comments, any, like, it's almost a classroom type of experience. If you have any questions, just email me in the course. I get right back to you, so you get to kind of have a one-on-one there. So check it out, theschoolofstock.com. And I'll talk to you very soon. See you in the markets. You know what? Surprise, surprise. I didn't finish. Well, I wanted to show you one more thing here. Let me get that one last thing up here. Let's see, we talked about the rockets, right? Talked about the divergence. We talked about the order entry, order entry charts here. The Rambot's other things going on. Let's see what else we missed here. I just want to talk about the stage 1, stage 2, what a divergence. That's all going down. Oh, the tools. I wanted to talk to you about the tools of the trade. The tradeometer. After all 20 years of trading, I've able to program a lot of the signals into our own bot or our own trading order entry indicator. It's called the tradeometer, and it'll mark off buy zones and sell zones in the ES, the NQ, the YM, and some of the oil futures, gold futures, and more coming. And then we have the Rambot, which automatically identifies the divergences. And those divergences are, you know, again, that's our ATM machine. So we have divergences there set on the 5-minute time frame. Those are going to be awesome. And as a member, you could set up your emails and your text alerts to get any alerts you needed. So, last thing to say, hey, Trading Radio, good to see you, and talk soon.